Right. Yeah. So obviously your candle's gonna look a lot different to mine. Obviously I've got colours that I like, but this will probably be more like yours. So let's just get this in place. Okay, so obviously your green candles mean it's going up, and um, you know, uh, your red candles mean it's going down, obviously. Okay, um, so if we do this, make it red, um, yeah, that's red. Okay, then we're gonna go boom and boom, and then we're gonna go boom, change that to red. Okay, so assuming you know nothing about this, yeah, green means buying candle, red means sort of selling candle. Now, when you've got your massive candle, obviously this is going to be a seller's candle, then that will be that candle. So all this means is that, let me get an arrow. Yes. Okay, so, oh, that didn't help, did it? There we go. Okay, so all it means is that this was the highest that your candle went. So this means buyers pushed the candle all the way up, and then this was the lowest, sellers took it. Yeah. So this candle means that this is the area in which price has opened, like where the candle started, and this is where the candle finished. Obviously, if the candle was green, it would have been. So let's do this. So then it would have been like this. Change it to green. Uh, okay. So because this candle closed down here, it means this one's going to open down there, right? And then it closed up here, so that just means that the next candle is going to open from there. And it could even be like this, for example, where it's a lot smaller of a candle with a larger wick. That just means that's the lowest it went, and that just means it's the highest it went. And from this, then you know the next candle's going to open like that. And your wick could potentially just go all the way up, even more. Yeah, okay, so that's the main important thing you needed to know about that. Now, when I trade, all I look for, so go into trading view, obviously it's up top there, it's free, so you don't have to pay anything for it. Um, and yeah, all I look for when I trade is a fair value gap, which is a massive gap in price. So as you can see, we've got, so this candle is down here. Oh shit. Say that candle was there. This one came all the way down. We can come a little bit lower. Okay, so say that was my candle, or that was my chart at the moment. Obviously I had previous candles already. Now, what I look for is I look for the gap. So from the top of this bottom candle to the bottom of the third candle, that is what I'm looking for. Like that is my main key point of looking for a trade. So what am I expecting price to do? Well, all this means is that it's a place in which the market's not filled, so there's a high chance of price returning into it. So just going to keep it nice and short. I'm just going to draw a path of what could potentially happen. So it could continue going up, and then price could come back down into it, and then price would potentially bounce back off. But don't say set a buy limit sort of around this area, because not 100% of the time it will happen like that, because sometimes what price might do is price might not like that reaction, so price could go up, come all the way through it, but price will then retest it and potentially continue downwards. But in some cases price could just continue straight up. So yeah, I mean, it's the exact same thing for sell side, where you'll be looking for the opposite. So I'm just going to delete these and show you on the actual candle. Obviously my blue candle is your green candle, and my pink candle is your red candle. So if we come into here, so on these blue candles, you can already see straight away you've got a fair value gap from there all the way up. Okay, and what did price do? Price came back into it because it hasn't been filled before, and then price shot up. Now if we drag it all the way across, we can, so now this one's been filled, now we're going to regard the next one. So that's my next candlestick, or my next fair value gap, sorry. Now we're waiting for I was waiting for price to come back into this area before I took a trade, so I didn't buy off this area. Now what you're waiting for is price to come back into it. Now as we can see, price came back into it, but price didn't retest it afterwards, so we disregard it now because price has filled it. And now when we go to the opposite direction of how price reacted to everything, we can see already straight away another fair value up over there. Boom. What happened? Price came back into it, into that fair value gap, and then price just continued downwards. Now, when you see a candle wicket sort of like that, don't enter off of that, wait for a confirmation candle. So in terms of this trade, you'd want the trend, or you'd want the candle to close below a previous low for it to continue downwards. You don't want to be entering off something that's not an entry, because you're going to be losing a lot of money on it. But yeah, that's that for this video. Next video should sort of just be like determining risk, and sort of, yeah, that that's everything you need to know. I mean, if you're able to identify the fair value gaps, you can either wait for, let me try and find one where price retested it. We'll do this quickly and then we call it a day. Um, okay, yeah, here's a good one. So, here we go. So there's a fair value up there, correct? Price created that, and now it didn't retest it. Pricing came into it, didn't show any signs of rejection, then broke through it, retested down, and continued in an upward trend. Now obviously there's different things to this. What I like to do is most of the time I go on the 4 hour chart, or say the 1 hour chart, and all you want to do is really just look for liquidity. Let me go onto my actual chart for this. I'm just waiting for liquidity to be taken. So I know price has previous lows down here, and I know price has now created a previous high, which is up there. And in this we can already see there's a fair value up there that I've marked out, and there's a fair value up there that I've marked out. So that's all we're going to be waiting for, is just the entry on all of those trades. But also do not trade sort of late night. So when it comes to about 6 o'clock, call it a day. Not even when it comes to about 4 or 5 o'clock, call it a day. You're just going to be wasting your time on it, because price ain't going to have much action. Best time you're wanting to trade is probably from about 8 AM till about 4 PM London time. And yeah, indicators and that bullshit, don't work. Genuinely, just trust the draws of liquidity. So, one last thing quickly. From here, if price comes all the way down here, we're going to be expecting a reversal up because there's so many stop losses that are placed down here already from, say, your banks or your larger hedge funds, and when all of their stop loss orders get hit, market's just going to reverse completely. Or when take profits get hit for sales, it's just going to reverse completely. So it's genuinely, it's just focusing on all of that. But yeah, expect reversals. Go on the 1 hour chart, look for liquidity, wait for price to reverse it, and then you're good. 3 minute entries, best entries you can get. But yeah.